So hello friends, welcome to my channel. I'm in coaching center. So today I'm going to explain you that is the principle and practice of accounting's fourth chapter, capital and revenue, expenditures and receipts. So capital, it has payments and receipts, and also has payments and receipts. So introduction about capital and revenues. So accounting, it aims in ascertaining and aims in the presenting the results of that business for an accounting period, for the period which 1 year. For ascertaining the periodicity business result, the transaction should be analyzed. The accountant should analyze whether they are capital or revenue, whether it is paid by our owner or whether we got our revenue from the people. So the revenue expenses about the operating of business of an accounting period, or the revenue, it is earned during the period, or the items of expenditure and benefits of which do not extend beyond that period. Benefits does not extend to leaving that period is the capital, is the revenue. Next, capital expenditure. Capital expenditure, on the other hand, it generates and it gives us benefits and helps in revenue generation for more than one accounting period. For revenue generation, it helps us in more revenue generation more than one accounting period. Revenue expenses must be associated with the process that may be use of goods and services in support of those functions. Use of goods and services in support of those functions that causes expenses to occur, that have made expenses to occur. That is called as the expenses, or they are treated as the profit and loss account through matching principles. It is called as profit and loss accounts, which tells us when and how much of the expenses to be charged against revenue, how much of expenses should be charged, and a part of the expenditure can be capitalized only when these can be traced directly to the definable streams of future benefits. So it can be traced directly, and it may help us to benefits in the future. So the distinction of transaction, into revenue and capital. The distinction of transaction in revenue and capital is done for the purpose of placing them. In profit and loss account or in balance sheet to place them. The distinction is done between the revenue and capital. Like an example, revenue expenditures, they are shown in the profit and loss account has their benefits or for one accounting period. So they show loss account in the benefits for one accounting period in which they are incurred, you can see they are incurred, while capital expenditures are placed on the asset side, while the capital expenditure are placed on the assets one side, one asset side in the balance sheet, as they will give you the generate benefits for more than one accounting period. It will give you the benefits, the capital expenditure, and will be transferred profit or loss account of the year. In that year, it will transfer to profit and loss account of the year on basis of their utilization, of that benefit in particular accounting year. It has whether it gives you profit or loss, and hence both capital and revenue expenditure are ultimately they are the profit or loss account. Also, you can say both capital and revenue expenditure. Revenue expenditure, they are transferred to profit and loss account in the year of the spending, while capital in that year it is the revenue expenditure, it is transferred to the profit and loss account in that year. But the expenditure account, it is transferred to profit and loss account of the year in which their benefits are utilized. It is in the capital expenditure, they are transferred to profit or loss account in the year in which it is area in which you can utilize that money. So therefore we can conclude that it is the time factor which is the main determinant for transferring the time factor that is main determinant for transferring the expenditure, making the expenditure of profit or loss account, telling us the profit or loss account. Also expenditure are recognized in profit and loss account. It can be recognized through profit and loss account by through matching concepts. Through matching concepts you can know, which tell us that tells you when and how much of expenditure to be charged, to be taken against revenue, on which revenue you have to take the how much that expenditure. This expenses that will be said. Next, however, the distinction between capital and revenue it creates a considerable difficulty. In many cases, borderline between the two is very thin. The borderline between these two, capital and revenue, is very thin. So consideration in determining capital and revenue expenditure. So the basic consideration is in distinction between capital and revenue expenditure or nature of business. So for a trader dealing in furniture, purchase of furniture is revenue expenditure, but for any other trader the purchase of furniture, it should be treated as expenditure and shown in the balance sheet. So for if a trader who is dealing in furniture, he purchases furniture, it is revenue expenditure for him, because he gets revenue also, he does expenditure on it also. But for another trader who just purchases the furniture, it is treated as capital expenditure, because he gives money, capital money, and it should be shown in their company's balance sheet. It should be shown that this much of the capital, this much of the money it is given for them for buying the furniture or anything. Therefore the nature of the business is very much important criteria in separating the expenditure between, to know the expenditure between the capital and revenue. Next is recurring nature of expenditure. So recurring nature of the expenditure if the furniture of an expenses is quite often in an accounting year. If the furniture in an expenses is quite often in an accounting year, then it is said to be an expenditure of revenue. Then it is said to be an expenditure of revenue that will give you revenue. While non-recurring expenditure is infrequent in nature and do not occur often in the accounting year. So non-recurring expenditure will not get. Recurring means new makes you also learn about recurring. So the non-recurring expenditure is infrequent in nature and it does not occur many times in an accounting year or accounting period. So monthly salary or rent is some of the example of revenue expenditure, as they are taken every month, while purchase of assets is not the transaction done regularly. So purchase of assets is not transaction done regularly every month, so classified as capital expenditure. So the regular so the purchase of assets is not regular, so therefore it is called as capital. It is classified to capital expenditure unless materiality criteria defines it is an revenue expenditure. Unless materiality criteria that you learned in your last chapter, it tells that it is revenue. Next is purpose of expenses. So expenses for repair of machine may be incurred in course of normal maintenance of the asset, may be taken for the normal maintenance of asset. Such expenses are revenue in nature. They are revenue. That expenses are called as revenue in nature. On the other hand, expenditure that is incurred for major repair of an asset so as to increase its productive capacity is capital in nature. So on the other hand, if a expenditure it is incurred for major repair, it takes place for major repair of the asset, so as to increase its productivity capacity, so that it can increase its productivity capacity and you can get more amount of revenue. So for that it is called as the capital in nature. If you do the normal maintenance, they are called as the revenue. But if you do the repair work for the production of for the increase in the production capacity, then it is called as the capital in revenue. However, determination of the cost of maintenance and ordinary repairs, that should be expensed, so as opposed to the cost, which although to be capitalized is not always simple. So although that money that should be already capitalized, which is not always simple, the money is capitalizing that money. So effect on revenue generating capacity of business. The expenses which help to generate income revenue in the current period or the revenue in nature. The expenses that help to generate of income revenue in the current period or in that current period of revenue is that is in nature and they should match against the revenue earned in that current period. So the expenses should match the revenue earned in the current year also. On the other hand, the expenditure also helps to generate revenue for them over more than one according period, one according period. It helps the company to generate more revenue next year also. So it is called as the capital expense. It is called as capital expenditure. Next, when capital expenditure. So when expenditures on improvements and repairs of a fixed asset is done, when expenditure is done for the repair, improvements and repair on the fixed asset, if we done in expenditure, it has to be charged to profit and loss account. That my expenditure, the amount which we have given, it should be put into the profit and loss account. If the expected future benefits from the fixed asset do not change, if expected future benefits from that assets, if it does not change, and it will be included, then it will be included to the book value of the fixed assets, where the expected future benefits from the that assets, it will be increased. The expected future benefits from that assets will be increasing. Materiality of the amount involved. Relative proportion of the amount that are involved in another improvement consideration is distinction between the revenue and capital. So the materiality, the relative proportion, the proportion of an amount that involved is another important consideration in the distinction between the revenue and capital. Next, capital expenditure and revenue expenditure. As we have already discussed, capital expenditure, it contributes to the revenue earning. Capital expenditure, it contributes for the earning of revenue, earning capacity of the business for more than one accounting period, whereas the revenue expenses is incurred. The revenue expenses, now here it was capital expense, but the revenue expenses when that we take, it is incurred. It helps for generating revenue for a particular accounting period. So for getting the revenue in particular accounting period, the revenue expenses helps. The revenue expenses either occurs in direct relationship with the revenue, it occurs in the direct relationship with the revenue expenses, or it in relationship with the accounting period, in relationship with that accounting period, it makes in the revenue expenses. For example, cost of goods sold, salaries, rent, etc. are some of the revenue expenses. Cost of goods sold is directly related to the sales revenue. It is the cost of goods sold is directly related, whereas the rent is related to the particular accounting period for that year, or for the days. For it, the where rent is related. Next is capital expenditure may represent acquisition of tangible or intangible fixed asset for enduring for making future benefits. Therefore, the benefits arising out of the capital expenditure last for more than one accounting period, whereas those arising out of revenue expenditure that expire in the same accounting period is the difference. Next, illustration 1. Let us know some of the reasons whether the following statements that are given are true or not. Overall, expenses of the second-hand machinery purchased or revenue expenditure. So, therefore, it is false because overall expenses that are incurred to put second-hand machinery in working condition so that to derive endurable long-term advantages through that machines for getting that machine, but so it is not purchased for revenue expenditure. Next, money is spent to reduce working expenses in revenue expenditure, so false. It may be a reasonable presumed that money spent for reducing revenue expenditure that would have generated long-term benefits for that entity because uh, it becomes a part of intangible fixed assets, and if it is not in the form of technical known how and tangible fixed asset, if it is in form of additional replacement of any of the existing tangible fixed assets, so this is a capital expenditure. It is so therefore it is not in revenue expenditure. Next, legal fees to acquire property is capital expenditure. Yes, it is true because legal fees paid to acquire any property is the part of the cost of that property. It is possesses some of the ownership rights for the property, and hence it is a capital expenditure only. And next is amount spent as a lawyer's fees to defend a suitable claim that the firm's factory site belongs to the plaintiff's land is capital expenditure. So it is false. But because legal expenditure, it has to defend a suit claiming that the firm's factor site belong to the plaintiff is maintenance expenditure of the asset. It is the maintenance expenditure of the asset. By these expenses, neither any endurable benefits can be obtained in future. In addition to that, what is presently available nor the capacity of the assets will be increased. So therefore, it belongs to the revenue expenditure, not the capital expenditure. Amount spent on the replacement of worn out part of the machinery is the capital expenditure. So it is also false because amount spent for replacement of any worn out part of machine, it is a revenue expenses since it is this part of maintenance cost, because it is a part of maintenance cost you will, but so that's why it is the revenue expenditure. Next is expenses incurred on the repairs and while washing for the first time on purchase of an old building or revenue expenses. So it is also false because repairing and whitewashing expenses for the fire for the first time of an old building that are incurred to put the building in unstable condition. So these are some of the part of cost of building. According to this, it is the capital expenditure, not the revenue expenditure. Next, expenses in connection with obtaining a license for running the cinemas is capital expenditure. Yes, so the cinema halls could not be started without any license, so expenditure incurred to obtain some of the pre-operative expenses which is capitalized. Such expenses, such amount thing is called as the capital expenses. Next, amount spent for the construction of temporary huts which were necessarily for construction of the cinema house and were demolished when the cinema house was ready is capital expenditure. So yes, it is right because the cost of temporary huts constructed which were necessary for the construction of the cinema houses, it is a part of construction cost of the cinema houses, and therefore these costs are to be capitalized. Next, another illustration 2 is expenses that are incurred in connection with obtaining a license for starting the factory for rupees 10,000. So money paid for rupees 10,000 for obtaining a license to start the factory. It is a capital expenditure because you are paying the money. It is capital, the money you are giving. So this is an item of expenditure that are income. It has some of the right to carry on the business. Some of the rights you will get by this. You will get some of the rights to go ahead for doing your business. Rupees 1,000 paid for removal of inventory to a new site. So rupees 1,000 paid for removal of inventory to a new site. It is a revenue expenditure because this is neither bringing some of the benefits nor it is giving any value to the assets. So it is not bringing any benefits for you or not giving any assets. So therefore it belongs to the revenue expenditure. Next. So rings and pistons of an engine were changed at a cost of rupees 5,000 to get fuel efficiency. So rupees 5,000 spent on changing rings and pistons of an engine to get some of the fuel efficiency it is a capital expenditure because this is an expenditure on improvement for on a fixed asset, and it results in increasing the profit earning capacity. Also it may increase for that person. So it is a capital expenditure. Next, money paid to Mahanagar Telephone Nigam Limited (MTNL) is rupees 8,000 for installing telephone in the office. So money deposit with MTNL for installation of telephone is in office is not expenditure. It is not an expenditure. This is treated as an asset, as the same is adjusted over a period of time against actual telephone bills they will take for the bills for the telephone which you use. So a factory shed was constructed at a cost of rupees 10,000. A sum of rupees 5,000 had been incurred in the construction of temporary huts for storing building materials. So cost of a construction of building including cost of temporary huts, it is a capital expenditure. Building is fixed assets which will generate some of the enduring benefits to the businessman over more than a accounting period. So that's why construction of temporary huts is incidentally to the main construction. So such cost is also the capitalized with the cost of the building only. It will be taken as it will be taken. Capital receipts and revenue receipts. So the difference between the capital receipts and the revenue receipts is just as a clear distinction between the capital and revenue expenditure you learnt it is necessary. In the same manner, the capital receipts must be distinguished between the revenue receipts. So revenue receipts which are obtained in course of normal business activity or the revenue receipts. The revenue receipts which are obtained in the normal business is called as revenue receipts. On the other hand, receipts which are not revenue in nature or capital receipts which are not revenue receipts means that are not obtained due to the normal business. It is obtained for any other investment or by any other thing. The money that you have got, it is the capital receipts. Revenue and capital receipts are recognized on an accrual basis as soon as the rights of receipts is established. As soon as the right of receipts is established, you can watch that. You can know that about the accrual and you can know about the revenue and capital receipts. Revenue receipt should not be equated with the actual cash receipt. It should not be equal to the actual cash receipt. Revenue receipts are credited to the profit and loss account. It is taken to the profit and loss account. So let us take. So for example, when a fixed asset is sold and for 92,000, cost is 9,000, the capital receipts is 92,000. That is not credited to profit or loss account. Only profit and loss on sale of fixed asset is calculated in the credit to profit and loss account for the following. See, 92,000 sales done. Cost you paid is 90,000. Profit you got is 2,000. This is the another thing. Next here some more illustrations you can see. Let us see. Illustration 3 is, so second hand furniture worth rupees 9,000 was purchased. Repainting of the furniture it cost 1,000. The furniture was installed by own workman. Wages for this being rupees 200. It was the furniture was installed. So the cost of the furniture should be treated as 10,200. 200 should be cost, because all amount you should add. All the amount mentioned should be capitalized, since without such expenditure the furniture would not be available for us. So therefore rupees 1000 and 200 have been respectively debited to the repairs accounting and the wages accounts, and these accounts will be credited for the furniture account. It will be credited. Next, expenses in connection with the obtaining a license for running the cinema worth rupees 20,000. During this course of the year, the cinema company was fined rupees 1,000 for contravening rules, and renewal fees rupees 2,000 for next year also paid. So half of the insurance premium pertains to the year beginning on 1st April 2020. Hence, such amount should be treated as prepaid expenses, and the remaining amount is the revenue expense. So half of the amount you have paid, that amount should be taken as prepaid expenses, and leftover amount should be the revenue expenses for that current year. The next question is, temporary huts were constructed for rupees 1,200. They were necessary for the construction of the cinema. They were demolished when the cinema was ready. So since the temporary huts were necessary for the construction, their cost should be added to the cost of the cinema hall, and thus it is capitalized. That for that we should capitalize the money. Next, overhauling expenses of rupees to 25,000 for the engine of a motor car to get better fuel efficiency. Overhauling expenses are incurred for the engine of a motor for fuel efficiency. So these expenses will reduce the running cost in future, and thus it will benefit us for a long-term advantages. It will give us a long-term advantages, and this expenditure should be capitalized. Next, inauguration expenses of rupees 25 lakh, that is incurred on the opening of a new manufacture unit in an existing business. So inauguration expenses of rupees 25 lakh that are incurred in the opening of a new manufacture unit is in that existing business. So the expenditure may not be generated any enduring benefits to the business for more than one accounting period. It may not give any benefits for that businessman more than for one accounting period. Next is compensation of rupees 2.5 crore paid for the workers who opted for voluntary retirement. So the amount paid to workers on voluntary retirement is the nature of revenue expenditure. Since the amount of expenditure is very significant, it may be better to defer it over future years. It may be better to defer it than future years. Next is rupees 10,000 spent as traveling expenses of the directors on trips abroad for purchasing of capital assets they have gone. So for rupees 10,000 they have spent as traveling expenses. So it is a capital expenditure because they have taken it from the company's owner or the money from the company. So amount received from the trader receivables during the year. So it is a revenue receipts because the revenue with that we should become, and they have given it as a receipts they have given. Next is amount spent on demolition of building to construct a bigger building on the same site. So it is a capital expenditure because you will demolish and you will bring uh, um, another big building, so it will help you also you to earn profit in your future also, and also it is taken from our the owner's bank account. So insurance claim receives on account of machinery damage by fire. So it is a capital receipts because you have to pay the insurance, and the insurance company will give them the money, so from them it will take. So that's why it is a capital receipts. Next is Mr. ABC and CO run a restaurant. They renovate some of the old cabins. Because of the renovation, some space was made free and number of cabins was increased from 10 to 13. The total expenditure is 20,000. So renovation of the cabin has increased the number of cabins, and this has an effect on the future revenue generating capability of that business. So therefore it becomes the capital expenditure in the future. Next, Mrs. New Delhi Financial Corporation sold some of the certain goods in the installing on installment payment basis. So few customers did not paid installments. So to recover to such outstanding installments, the firm spent rupees 10,000 on account of legal expenses. So these expenses they include to recover installments due from customers they do not increase the revenue generating capability in future, and it is normal recurring expenses of the business. So thus the legal expenditure that is included in these cases is revenue expenditure by their nature. So Mrs. Pallav and Corporation of Delhi purchased a machinery of Mrs. Shah and Corporation of Ahmad and Mrs. Pallav Corporation. They spent 40,000 for the transportation of that machinery. So the year ending is 31st December 2019. So expenses incurred on account of transformation of fixed asset is the capital expenditure. Is a capital expenditure because they have given them a 1 year of time. So here you can see some of the questions from this chapter, and here you can see answers also. So okay friends, I think you understand your fourth chapter, capital and revenue expenditures and receipts. So this was your chapter. So if you like my video, please give a like. How was So if you have any doubt, please put it in the comment, and how was my video, please give a comment. And for more videos on your chartered account chapter, subscribe my channel Amen Coaching Center. So till then, take care, have a nice day, bye my dear friends.